Meet Dave. Dave wanted the new iPhone, but he didn't have the cash. No problem. He's got a credit card. Swipe. Approved. Easy, right? Except that swipe, it just launched Dave into years of debt. Yeah, turns out the card was never really free money. It was a trap. And Dave, he's not the only one caught in it. So where did credit cards even come from? Let's go back to 1950, New York City. A guy named Frank McNamara is out at dinner with his wife and a friend. The check comes, and Frank realizes he forgot his wallet. Awkward, right? But instead of panicking, he gets an idea. What if there was a way to pay without cash? 1 year later, Frank launches the Diners Club, the very first credit card. It was literally a cardboard card. Only worked at 27 restaurants, but it was a hit. People loved the feeling of being able to pay later. It felt powerful, easy, fancy even. Fast forward to 1958, Bank of America jumps in with something bigger. The Bank Americourt wine, which later becomes Visa. But here's the wild part. They mailed out 60,000 cards to random people in California without asking. Yep, people just opened their mailbox and found a fully working credit card inside. Some folks were thrilled. Others were like, what the heck is this? But the damage was done. The credit card boom had officially started. By the 1980s, everyone had a card, or two, or five. It was no longer just for dinner. It was for gas, clothes, TVs, vacations, you name it. What started as a fix for forgetting your wallet became a global habit and eventually a trap. And it wasn't just Visa. In 1958, American Express launched its own charge card, targeting wealthier users. By 1966, a group of California banks formed MasterCharge, which would later become MasterCard. Within a decade, the big three, Visa, MasterCard, and Amex, were battling for dominance. What started with 27 restaurants now included airlines, gas stations, hotels, and department stores. Credit was no longer just a tool, it was becoming a lifestyle. And here's the wild part. This all really happened. In 1950, Frank McNamara actually did forget his wallet at a restaurant in New York City. That awkward moment led him to invent the first credit card, the Diners Club. Then in 1958, Bank of America mailed out 60,000 credit cards to random people in California. No warnings, no requests. Just surprise debt waiting in the mailbox. People were confused, some even angry, but credit had already started spreading like wildfire. Now, here's where things get sneaky. See, in the beginning, credit cards were meant to be paid off every month. No balance, no interest. Just a convenient way to pay. But banks? They saw something way more profitable. People weren't paying off their cards. They were carrying balances month after month. And that's when the banks realized, wait a minute, this is gold. They stopped encouraging full payments and started pushing minimum payments instead. Why? Because the longer you stay in debt, the more interest they collect. Credit cards weren't just a tool anymore. They became a trap. By the 1980s and 90s, credit card companies were making billions from interest alone. And the more people struggled, the more money the banks made. It was the perfect system. For them, not for you. You swipe, you spend, you struggle, they sit back and profit. Let's talk about the biggest scam hiding in plain sight, the minimum payment. Sounds helpful, right? You owe $2,000, but they say, hey, just pay $60 this month. Feels like they're doing you a favor, but they're not. What they're really doing is keeping you stuck. That $60 barely touches your actual balance. The rest, it goes straight to interest. So you keep paying month after month, and your balance barely moves. Here's the math. If you only make the minimum payment on a $5,000 balance, it could take you over 20 years to pay it off. And by the end, you'll have paid over $11,000 for something that cost $5. It's like trying to drain a pool with a spoon, while someone else keeps filling it. Minimum payments sound friendly, but they're built to keep you paying forever. Take Sarah, for example. She put $3,000 on her card during a rough month. She started paying $75 a month, the minimum. After a year, she'd paid nearly $900, but her balance? It only dropped by $300. And she's not alone. Millions fall into this cycle. It feels manageable, but it's slow, silent financial quicksand. By the time people realize it, they've lost thousands to interest alone. And this isn't just theory, it's backed by real numbers. According to the Consumer Financial Protection Bureau, people who only make the minimum payment on a credit card can take over 20 years to pay it off. And by then, they've usually paid more than double what they originally spent, just in interest. Now let's talk about the shiny object that gets everyone hooked. Rewards, cashback, points, airline miles. It all sounds like free stuff just for using your card. But here's the trick. People spend more just to feel like they're earning something. Buy coffee? You get 1% back. Buy a TV? That's 2%. Sounds great. Until you realize you spent $1,000 to get $10. Yeah, you spent $10,000 chasing a free blender. Studies have shown that people with rewards cards actually swipe more often, even for things they don't need. Why? Because it feels like you're winning. But in reality, you're just spending. The rewards are bait. And the hook? Interest, fees, and more debt. The house always win, I think. And in this case, the house is your credit card company. One guy went viral online for spending $50,000 on credit cards just to collect airline miles. He got a first-class trip, but also $12,000 in interest by the time he paid it off. That free seat? It came with a very expensive receipt. This happens all the time. People chasing perks they wouldn't otherwise pay for, just to feel like they're getting a deal. One guy actually went viral on Reddit back in 2016 for this. He spent over $50,000 chasing credit card miles for a free first-class flight, and ended up with more than $12,000 in interest before he paid it off. Yeah, and that seat wasn't so free after all. Here's another trap no one talks about. Credit makes you feel richer than you are. You swipe, it works, and suddenly you're buying stuff you wouldn't touch if you had to pay with cash. New clothes? Sure. Fancy dinner? Why not? iPhone 17. Even though you're still paying off the 14, go for it. You tell yourself, I'll pay it off next month. But next month, you're broke again. That's lifestyle inflation. And credit cards are the gas pedal. You start living like your future self is rich. But future you is just stressed and buried in bills. This isn't wealth, it's an illusion, and it's super expensive. Ever feel like your credit card is working against you? That's because it is. Late payment by one day? Boom, late fee. Sometimes $30 or more. Miss 2 payments? Say hello to the penalty APR. Your interest rate jumps from 18% to like 29%. Annual fee just to use the card? That's another hit, even if you didn't use it at all. And don't forget those lovely hidden fees, foreign transaction fees, balance transfer fees, even cash advance fees, just to take out your own money. These aren't accidents, they're features designed to make sure the moment you slip, they get paid. Credit cards are made to look helpful, but under the surface, they're built to squeeze you when you're weakest, because your mistakes are their business model. Here's how some common fees hit. Late fee, $30 to $40 just for missing by one day. Balance transfer fee, usually 3% of the total amount, $300 on a $10,000 move. Foreign transaction fee, 2 to 3% every time you swipe abroad, or even online if the vendor is overseas. It adds up fast, and the credit card companies don't exactly advertise it. They bury it in the fine print. In fact, in 2019 alone, U.S. banks made over $14 billion just from late fees. And if you miss even one payment, your interest rate can legally jump up to 29.99%. That's not a glitch, it's the business model. Now here's the good news. The trap only works if you don't know it's there. Once you understand how this system is built, you can step around it. You don't need to cut up every card, you just need to use them on your terms. That means pay your balance in full, ignore the minimum, skip the temptations, and never trust the rewards to be worth the risk. You don't have to play their game, and if you're already stuck, it's not your fault, but it is your fight now. Start small, pay off one card, then another. Because the moment you stop feeding their system is the moment you take back control. You're not bad with money. You were just never supposed to win in their system. Now that you know, you can. So if this hit home for you, don't panic. You're not behind. You're just now seeing the game. Take a breath. Make a plan. And if this video helped, hit subscribe. Because if no one taught you this, I will. Since 2020, tons of people have started waking up to the system. The hashtag debt-free community on TikTok and YouTube exploded. People sharing how they paid off cards, ditched the games, and took control. So you're not alone in this.